and I'm sharing the screen. So as always, hello everyone, welcome to this new sector meeting. So as always, if you want to ask something or if you don't understand something, just send a message to the chat or unmute yourself and ask us any question. So where am I? Here. So all yours, Dan.
Yeah, solid, mate. Yeah, bit of a smaller group tonight, but it doesn't really matter. But yeah, it's always better when people attend. Get your cameras on, get your mics off, because there's only a few of us here. Don't really mind. Yeah, competition's starting to close out now, as everyone is probably aware. So just a couple reminders. It is an actual competition. We're in the lead, but we can be overtook. I know Haley and Gonzo were chatting about it. I think Kai is starting to catch up. Yeah, we're here to win. If you want to have fun, join Greg's team. They're down 45%. Yeah, second place are the first losers. We aren't losing. I'm pretty competitive. You don't have to be, but I am. That's why we are where we are in the lead. So yeah, just thought I'd share that goal for everyone. So next slide, Cancel, please. Yeah, cool. Bit of format error there, but so not much has changed since. So kicking off Treasury Yields. I know it was mentioned in the last wider fund meeting, but I'm going to go over it again in a bit more depth. They've begun to fall essentially, which is good. Showing a bit of demand again. It's probably come from the higher yields, but I'll chat in a bit more depth in the next few slides. Johnson & Johnson have received FDA emergency use approval. We're going to be propping up that US economy real nice. Rishi Sunak's just announced his UK stimulus, and he's just announced his budget today as well. In essence, corporation taxes went up to 25%, and there's no change in income tax. And furlough's been extended to September. Joe Biden's turned on the money printers, standard stuff. Kathy Woods, who runs ARC, really good fund manager. Really recommend giving her research. Palantir dipped because of the yields rising, and she topped up Palantir, just balancing out the portfolio, but it shows the institutional interest is still there, which is great. More in the US, the bombed Syria. I'm not sure why, don't want to know why, but expect oil prices to go up because obviously supply will be a bit more limited now. And then more into the commodities. Gold started to dip, still dipping, even though inflation's a risk, which makes 0 sense. And copper's surging. There's a bit of rumor about a super cycle going on. And a super cycle is just one giant, usually decade-long rally. And yeah, bit of format errors, but yeah, there's some charts. Just want to open it out to everyone. Has anyone read anything of note? Want to mention anything? Just feel free to turn off your mic and go for it.
I also saw COVAX, the team from the WHO who are providing the vaccine to developing countries. They started distributing the vaccine to countries in Africa this week, I think.
That's fairly interesting, actually. Didn't know that. Ardis, have you got any thoughts?
Sorry, mate, nothing at all. I didn't read anything this week.
Nah, that's cool, fair enough. I try and keep market overviews pretty.
Yeah, this is actually fun meetings where I actually catch up with stuff. I'm like, whoa, that's going on.
Yeah, I mean, does anyone study economics here? No? Cool. Right, moving on. Next. Yeah, so we've got some charts. Just gonna quickly flick through them. We've got the dates on the bottom. We've got the price going up. So yeah, you can really see gold starting to tumble since its peak in around August, end of July. It's quite concerning given the macro conditions, especially with so much money being put in the economies. Inflation is no doubt a risk, and when gold's usually a safe haven for inflation, so it makes no sense for it to be going down. Technically, it should be going up, but I think it just shows the allure of like the US equities, like in the S&P, as in the Nasdaq and the Dow Jones. Investors are clearly seeing better opportunity elsewhere, so they're very risk on, which is quite concerning given the current standards, but I guess we've just got to let them. So fairly straightforward one. Next slide. Yeah, we hold as a fund some copper miners, we hold some EV manufacturers, and some ESG funds, all very copper intensive, and they have directly benefited from this massive surge in copper. Obviously miners can sell it for a higher price, and the asset, the balance sheet for these ESG companies suddenly like spikes in value as well. But you're really starting to see it reach into some peaks now. But if you notice the red line below, it's just started to dip at the very end, but the black line has maintained its rise. So it would be too daft to say maybe a small dip in copper could come from it, because futures are indicative of the actual price of copper. But again, it's based off past data. We've just got to see how it rolls. But yeah, another nice chart to look at. Next slide. Yeah, this is another good one that I got from LinkedIn, I think. This is really showing the transition between growth equities and value equities. So obviously growth equities are in orange, value equities are in red, and value's seen a bit of a flaw, and I think they're just starting to rise. Whereas you can see the huge exponential rise in growth, and it's just started to tail off, and maybe we can see a bit of a dip, and maybe a rotation between the two. You've seen them cross at around 2019, 2020. Maybe it could happen again in the future. But yeah, another interesting overview of the market. And I think this is the last one, but this is the Nasdaq relative to the ACWI, so the All Country World Index. Every single stock in the world relative to the Nasdaq performance. And what you've seen here is the Nasdaq really fall off a bit of a cliff, which is really indicating there's opportunity elsewhere, whether that be in Europe, whether that be in South America or Asia, emerging markets, developing markets, or alternative assets, really, so like property, REITs, or commodities such as like metals, grains. Yeah, it's interesting to really get a gauge on how the markets are going right now. Bitcoin isn't included in this one, unfortunately. I can get some Bitcoin charts up for next week. I've got some good ones. Next slide, I think, on. Oh yeah, this is the best one. I'm going to run over 10-year treasuries real quick, because it is a bit of a hot topic and they are quite confusing. So, a bond yield is essentially the interest it pays out. Think of a yield. A yield is interchangeable with the word interest, and a coupon is how often that yield is paid back out. So think of it as a repayment. Now, there's been a global sell-off of bonds because they're less desirable, and there's more opportunity to be seen in equities. And so to really stop this global sell-off of, in this case, 10-year Treasury yield, they've given investors more of a reason to come back into them by offering a higher reward for it. In this case, by giving a higher yield, so it returns more of a reward rather than speculative equities such as Neo, Palantir, etc. But yeah, this chart really shows that these levels, even though they're concerning now, they're nothing compared to the past. We've seen 15% on this yield in the 80s, I'm pretty sure, and everyone's crying about this at 2%. So it's quite concerning. But
Dan,
yeah,
when you say concerning, with respect to what?
Inflation, essentially. How does the yield distribution work? So this is a 10-year yield, sorry, a 10-year bond, and so that yield is for the duration of the bond. So you'll get 1.407% on that 10 years. If that makes sense, Ben. Just take yourself off mute as well if you want. I don't mind because it's quite a small group tonight.
Hey. Hello. Yeah. Yeah. So I'm just wondering, like, does that mean that after 10 years you make a 1.4% gain?
Yes.
Really? So like, it seems I find it very confusing as to why people might take those sorts of options if they weren't investing like a really large sum of cash.
Yeah, I'm glad you brought that up. Bonds aren't for the traditional retail investor. Usually a bank would have to purchase them and then break them down further. And these banks are paying hundreds of millions for these and then breaking them down into their own products to then sell to the consumer, which is us, if that makes sense.
Yeah.
But yeah, bonds, corporate bonds, they require a very large amount of capital to purchase.
Yeah. Nice one. Cheers.
Yeah, nice one. Next slide, Gonzalo. Yeah, so I've just went over it briefly. So why so much commotion over the US Treasury? So we'll start off real simple. Global government bond sell-off has caused the Fed, the Federal Reserve, to increase the yield on 10 years. As I've explained, it's to provide more upside to purchasing them, maybe cause a bit of an influx of demand. A bond is essentially a loan with the yield acting as interest. So if I give you £1 and we've got a 10% yield, I'm going to give you 10 pence extra. Nice and simple. And the whole commotion is this rate is commonly used to determine the weighted average cost of capital for companies. And for speculative companies such as Palantir, for example, with very future-facing revenues, this is going to discount their revenues further because they're so forward-facing. I'll send over some slides regarding this because I presented this for the first fund meeting, I believe. It's really simple. I've got some good graphs on there. Everyone likes a graph. But 10 years, inflation risks are starting to set in with the US's loose monetary policy. So essentially, you've got more dollars chasing the same amount of goods, causing the price of that good to increase. Higher yields get higher inflation. But with high inflation, causes the dollar to erode in value. So you've got more dollars. Suddenly, your dollar is now worth less because it's more of it. And yeah, like I said before, more dollars are chasing the same amount of supply, causing prices to rise. Does that make sense? Please tell me if not. Solid. Moving briefly on. Yeah, so spoke to Ben on a nice call. Hope you don't mind me mentioning you here, Ben. And thought I'd cover some technical analysis. Thought it ties in well with Redmayne's portfolio construction as well. So a few simple terms, and you'll see these on charts. Gonzalo, I think after this, I think it's best if we bring up some charts on Xandy to show this in practice. But for now, I'll introduce you to the terms. So simple moving average. It is an average price calculated over a period of days. And this is usually over 25, 50 days, 200 days. And it just tracks the average price. That's all. Not complicated in the slightest. But then we've got an exponential moving average. And this is the average price again, but it places more weight on recent data points. So you're going to see a bit more of a noisier graph because it places more weight on recent data points rather than a simple moving average which takes them less frequent or places more weight on historic data points, creating a smoother graph. So really simple. Simple moving average is an average over a period of days, and an exponential moving average is an average, but it's more recent. Places more weight on recent events. So why are these important? Because they can really start help to identify trends over a period of time, and they can identify support and resistance levels. And the support level is usually the bottom, so how low a stock will hit, and the resistance level is the top end of it, where it stops rising. And me and Gonzalo will show you that on a chart after this. So a few drawbacks: the use of historic data, and that does not mean future trends will follow at all. And they can be slightly complicated, but only if you really start overcomplicating it for yourself. But for the most part, they are quite simple. Does that make sense? Cool. Nice one. So, just another quick one about stock selection, especially because we're moving into the last kind of part of this. And I thought it would be really relevant for those that want to maybe invest afterwards, or maybe do a bit more of it in their own time. I know Haley, you invest, you got the clean entry that I also have. So there's two types: top down versus bottom up. Really simple. Top down stock picking is you use a macro environment first to identify trends in economic health. And then this kind of dictates what industry you want to focus on. And from this, you'll use comparables to then work down to single out company. And a good example of this could be copper is in high demand because the electronic vehicle sector is starting to really heat up, and it's fueled by the transition into cleaner ways of living and ESG trends. So that's the macro environment, and we've already gotten to the industry because copper is needed for every battery. There's the industry, and then you'll use comparable analysis to figure out what company. So you'll lay out all the different miners, and you'll compare them to each other, and you'll pick out a single company based on different factors, whether the financial health, geographical health, all in there, and you'll pick a stock and you'll invest in it. Really simple. But bottom up is just the opposite. You'll place emphasis on a certain company in their own fund. It then filters out the macroeconomic factors and broader cycles, so the boom and bust cycles in the economy. And you work from the bottom up. So you'll pick a company using fundamentals. Fundamentally, how does this business operate? Where's its revenue coming from? How big is the market they're operating in? Can they retain customers? What product are they selling? And you work up, can they sustain this in this economic environment? What's the future outlook, etc., etc. So top down versus bottom up, super simple stuff I don't think it's very complicated, but happy to take questions on that. None? Cool. So, future outlook. Yeah, market's quite confused as of present. By the way, anyone, just feel free to take yourself off mute and kick in. I really don't mind. The market's quite confused. We've seen yields shoot up and come back down. We've seen stimulus packages come in and out. We've seen budgets getting announced. Texas has just come out of lockdown. Masks aren't even mandatory there anymore as of today or yesterday. Long story short, there's opportunity to be had. There's so much volatility and ensuing volatility. Copper surging, gold selling, inflation's a risk. But it makes no sense because, Ada, just go for it.
I just wanted to ask, why is Tesla stocks crashing? What's happening over there?
Yes, so you know when I mentioned the 10-year yield being a key factor as part of the cost of capital. So Tesla is such a speculative company with such a high price to earnings ratio and very forward earnings. So their earnings are very in the future. Their cost of capital has went up. And so you take that 10-year yield rate and you'll discount those earnings by that. And obviously the higher the rate, the more discounted the earnings. And the more discounted earnings mean they're going to be worth less. And so suddenly your revenue is now worth less. And now your company is then worth less.
Okay, I got it. Thanks, man.
Yeah. And that's happened across the board in tech. So Palantir took a huge hit. Neo just missed earnings and took a huge hit. It's very sector specific. But yeah, good question. And it's just fitting really nicely. Tech selling off because of the 10-year. So is it a good time to top it up? Or is it a good time to slim down holdings and start realizing some profit? Or do we top up and average down? Do we want to be risk on or risk off? Should we realize profits and protect it in safe investments? Or should we just realize a profit and invest some of the profit into super high risk equities? There's so many strategies we can do. And tonight, I think we should really start executing it because there's not long left and we need to win. So take yourself off mute, and I'd be happy to hear some thoughts.
I mean, I'll happily throw something in here, which I think, with a month left, could potentially be like even if it's just like a 10-20%. So obviously the F1, like the Formula 1 season, starts towards the end of March, and some of the teams have like been unveiling their cars this week. So Mercedes car was unveiled on Monday, and the Aston Martin car, who are making their first appearance in F1 since 1960, was also unveiled today. And that alone seen, well, the share price has gone up 5% today. It's still over 10% off its recent high. So I feel like there's been the company results for the fiscal year 2020 came out. I think it was about a week ago now, and they were really promising. We've got a lot more cash, they've lowered debt, and there's quite a lot of excitement going on around them in these next couple of weeks. So I think it could definitely be something to potentially put a little holding in, maybe make a 10-20%. I could definitely see. I'm personally invested here, and I'm hoping to cash some out in the next couple of weeks. But I think that could be potentially a good investment for the next couple of weeks, maybe.
Yeah, solid. You mentioned it was 10% off its top, right?
Yeah, but it's just under 10. Sorry, just over 10% off its like recent top. And last time it like sort of dropped and like sort of consolidated at about £16.20, and this time it's consolidated at £19.20. and now it's currently recovering at £20.35 off its recent top of £22.60. So I personally think we're going to see it push past £23 in the next few weeks. So there's potential there for like a little 10% gain. If we've got some spare cash lying around, we could throw in.
Yeah, we've got some cash. But ask your teammates, what do they think?
What do you guys think?
How much cash are we holding?
A fair amount, about 100, 200k.
What was the idea again? Sorry, I heard like everything apart from the name of the stock.
Aston Martin, like
Oh.
British car manufacturer. Yeah.
Yeah.
They've actually just had two posts tonight from Tom Brady and Daniel Craig, like congratulating the owner, like wishing them well and all that sort of thing. Sebastian Vettel as well. And what I've been finding recently, you mentioned that the market's very confused, and I feel like one thing that I've noticed is sort of guided the market in recent weeks or months at least is sort of attention. Like, what is everybody's attention on? What is the excitement around? What's also doing well, but where is everybody looking? What's everybody looking at right now? And I think those sorts of growth, the growth patterns I've noticed in recent quite a few places have been largely around attention. So I think it could be a good chance to make some money in the next couple of weeks. What's buzzing about the car today? Funnily enough, we've got like crypto.com ad as well, which I thought was funny.
Yeah, I'm glad you mentioned that, because what you've just alluded to there is like the herd mentality of retail traders.
It's definitely dangerous, but I think this is more solid.
Yeah, I mean, risks have to be cleared at this point. I was watching some Anton Creel videos. Definitely search him on YouTube. Great guy, legendary trader.
Him again, sorry.
Anton Creel, Kreil. Ex-Goldman, ex-Lehman Brothers, ex-JP Morgan, traded through the biggest of events, and he said the 30% institutional side of it, they realised their profits by the 70% retail side driving the market up, because they have this massive ability to buy at the top and sell at the bottom, which is perfect for them. So yeah, I'm glad you mentioned herd mentality. Something to keep in mind if you personally trade. Adis, have you got any comments on Aston Martin?
I thought we already had some holding in Aston Martin, because I distinctly remember someone suggesting it in one of the meetings before. Yeah.
We could have made
I'm sorry, man, I don't remember who it was. I remember it was suggested.
When you said it first, I actually personally invested in it and made 30% on it.
Wow, that's weird.
If we'd have got in, we would have made 70-75% by now. But I'm in it. I've got my holding.
Wow, this is great.
No, I'm only messing. We've done so well. Can't take it.
Console, have you got any thoughts on Aston? I mean, I haven't got any idea about what the stock is doing, but yeah, I mean, what you've said, Ben, is, I mean, you've explained very, very well that point of the company in the next 2-3 weeks. So, yeah, I mean, let's put some money in Aston Martin.
Well, it's a good job that Ben brought that up, because me and him had a small chat about Aston, didn't we? And I pointed out some of the financials. They're not great, but they can survive.
Yeah,
they can service the debt. Andreas, go for it.
Yeah, about the Aston Martin, do we look at that as a car manufacturer or like an F1 team?
Sector specific, more of a car manufacturer.
Yeah, because Aston Martin is an established car manufacturer, but not so established in the F1 scene currently.
So, back in the 60s.
Yeah.
But the way I kind of see it is they've got new models coming out this year, like the DBX SUV, which is they've sold so many of them. That's they've had a huge push in like China and Asia with that as well. It's done really well there. The F1's a global sport. It's going to give it so much more exposure, and that's what's so clever about Stroll, the guy who bought it, because he owned an F1 team. Aston Martin went bust. A chance to purchase like a legendary brand and then have those brand image rights, take it over to F1. And that's exactly what he's doing.
Yeah, and also like the previous team,
Yeah.
was Racing Point was like really performing good in the F1. So in that perspective, I see a good chance of like return, at least even for like the month we have left. Yeah, I like that. Yeah, to be honest.
All right, Ben. Here's a bit of an ultimatum for you. I want a bit of homework regarding Aston. Really simple. Right, we'll invest if you can find the answer. Whether it's positive or negative, we'll invest. Are F1 teams profitable for companies or not? And if they are, or if they're not, what's the profit and loss for Aston Martin?
Is it an F1 team or is it like the actual company?
The F1 team. Does it cost the company to run it, or is it profit generating?
So, I actually believe that I've read this before that like none of the costs are associated. It's just the branding. But I will get back to you on that just to like confirm. I'm fairly certain that is like how it is. They're just using like the image rights for it.
Cool. Great. Anytime, just shoot that over, and we'll get some capital put straight on that.
The markets should close obviously until tomorrow morning anyway. So
yeah.
I'll send it over by then.
Yeah, nice one. Well, I've got a bit of a pitch, done a bit of deep diving, got a bit of a play on airlines and kind of leaving lockdown, but it's not the traditional sense. So with airlines potentially opening back out, economies opening back up, production running back at 100%, obviously people are going to be emitting a lot more carbon dioxide. And so I was looking into some industrial gas manufacturers, and they've got some carbon capturing facilities which are getting put to full use. And then I started looking at the price of carbon dioxide per kilo by the EU standards and the American standards, and it's projected to go up in price from I think $33 to $40. And because of such a quick exit from lockdown, I think we can really capitalize on that, and I think it fits the timeline of the competition to an extent. Obviously, you drive up the hype before it happens and sell it at the top. It's kind of buy the hype, sell the news. And the company of target is called Linde, Linde, Linde PLC, global operator headquartered in Ireland, I believe. Just launched some hydrogen fuel products actually as well, which is great for ESG. But yeah, the focus is on their carbon capture technology, and they've doubled revenue this year compared to 2019, which is great, I think. And then 2020 has been healthy as well. Costs have increased, but the profits also increased very healthily financially, geographically diverse, and I think it plays into a trend which is very fitting. So that's my take. Any thoughts? Any?
I think it sounds like a good idea. What's the company called?
Linde PLC, Linde. Obviously, it produces a host of natural gas, precious gas.
Someone's got the tunes on.
Is it console?
What?
What's in your background?
What do you mean?
Is there some music in your background?
Music? No.
Is it? It's not me.
Not me, I was muted as well.
Okay, maybe yes, but kind of very quiet, and you can hear it. Fair enough.
Let's go long on music.
So yeah, I mean, I think your trade idea, Dan, is kind of very sensible. And now that you mentioned airlines, I think if we have kind of 2-3 weeks left, I think airlines and cruise companies are very, very good kind of options for now, because I mean they kind of plummeted during 2020, and they are now at very tasty prices, kind of IAG, or I mean I don't know any other airline, but I guess that EasyJet or Ryanair might be good companies to get some profit in 2-3 weeks. So
Yeah, I think what was I going to say? Yeah, we've got to take a real solid view. Are we going to leave this lockdown cleanly or not? I'm saying that as a UK country, like as a UK group. Are we going to leave cleanly out of lockdown, or is there going to be more restrictions put in place?
I don't think more restrictions, but I guess that we will still have to wear a face mask at kind of football stadiums for, I don't know, I guess another year or so. But I don't see more restrictions being put in place. We have to see what happens next winter. So I don't know, I guess around October, November, December 2021. I don't think, I mean, once most of the people are vaccinated, I mean, according to the experts, I mean, we should start to see light at the end of the tunnel. So
yeah, definitely.
But I think the problem with kind of stocks is that they've risen so much that, I mean, we're still kind of in lockdown, and I don't see stocks going up much more. I mean, the kind of Apples or Facebook, Amazon, Alphabet, and all of those. So I mean, it's quite an interesting point right now to see what's going to happen in the next half a year or so.
Yeah, we are very toppy, as they would say, very overvalued, especially in the US.
Especially in the Nasdaq. I mean, I think what happened. Sorry, Adit. What happened today with the S&P 500, the Dow, and the Nasdaq, with the difference that the Nasdaq went down 2% and the Dow, I think, went up just a little bit. I think that shows how overvalued the Nasdaq is compared to other kind of value companies, as you mentioned in one of the first graphs, or in Bloomberg, I think it was one of them. Yeah. So yeah, go ahead, Adit.
No, I just want to ask, till when is this competition going on? Or what's the date?
I guess...
I would say.
Sorry?
I would say we've got a month left.
Okay,
I guess...
so should we really be worrying about the lockdown ending and how it would impact?
Yeah, we don't need to worry about the long-term impact. It's macro considerations, yes, but time horizon is the issue here. But yeah, on that note, what should we start cashing in some equities and start taking some profit? Because I think that would be a sensible choice.
In my opinion, yes. The thing is that if we want to make, or if we want to still make some profit in kind of 2-3 weeks, because I guess this ends kind of the last week of teaching before the Easter break. I mean, we have to go to very, very volatile stocks to try to make some profit. So I think the sensible thing to do is to kind of realize some gains, and if people agree to put some money in some very, very volatile stocks, because otherwise, I mean, we won't make those 10-20% yield that Yupen mentioned. Because I mean, 10-20% in 2-3 weeks is a lot.
Yeah.
That's only reserved for cryptocurrencies or things like that.
Yeah, we need to keep generating that alpha, and the level of price changes. Obviously, that comes with something called beta, which is volatility compared to an index. Usually the S&P, I think. So yeah, it's a trade-off. But I think a wise choice in my books would be get rid of the ESG. It's not very alpha generating. It's very calm. It's we're not going to see much happen on that forefront. We've seen Joe Biden re-sign Paris agreements. We've seen him take a really green stance. I'd say it's at the top. And as for more speculative ESG players, Plug Power, they've took a bit of a hit. Even though the beat earnings, the 10 years kind of impacted their future projections. But since the 10 years kind of calms back down, and we don't know when it could rise again, it could be wise just to skim the profit off that. And we can use that for Aston Martin, for an airline, etc. I think we should retain some key holdings. So the likes of Johnson & Johnson, key vaccine providers. They are obviously going to be generating a lot of revenue. They prop the economy up, in my opinion, as of now. You know there's going to be a lot of volume, so they're going to be pretty safe stocks in that regard. They're not going to fall. There's going to be a lot of demand for it on the market. Start turning into electric vehicles, especially the Chinese, so like NIO. But then really start focusing on and with that capital, because that is quite a lot, put some into copper, because that is a very safe asset. Play in the trend, ride the wave up. It's pretty wise. But in reference to the first graph, we're going to have to be careful about entry. If there's a dip, we're going to have to watch it carefully. But it's a pretty good asset to get into. And then, yeah, that should be the backbone of the portfolio, where it's going to be pretty safe in terms of profits maintaining. And then jump into the airlines, jump into the Aston Martins, etc., and get that risk profile really ramped up, but on the back of copper being the safe holding. That's what I think, but I'm open to interpretation.
No, I like that strategy. I think our only risk would be that when schools do open up, extra restrictions could be, like more restrictions could be put in place. But even in that case, like more cases and deaths only rise a couple of weeks after, if that makes sense. So we would still, if those airlines and Aston Martin rose, we should still see a gain, even if those restrictions did offset, if that makes any sense.
Yeah.
I've potentially had like a bit of an idea. You know, like Cheltenham, the race festival's coming up next week. Could potentially look at investing in some betting companies, even though it's a bit like of a taboo stock.
Yeah, we don't give a shit about taboo stuff. We're one fund. We're not ESG central, man. Yeah, good shout. I think alcohol. So I think Marston's is a brewery. Got acquired by Carlsberg, I'm pretty sure, in 2020. I
remember that as well, because at the time, like, it's up like almost 100% since then, and I never took a position because I just kind of like, yeah,
yeah, I think that would be a good play with bars opening back up. So I'd really like to get some input from the other group members, the ones who have been a bit quiet, if that's all right. Andreas, have you got any thoughts?
Well, I haven't looked at it, to be honest. The things I look generally is the airlines, Gonzo mentioned before, and I don't think we're gonna like see any profit in like a month. I'm sure they're gonna be profitable in the long run, but not for less than a month. the companies I look, it's American Airlines and Delta, and they've only seen a rise during the Christmas and New Year's, where there was some traveling going on. But I don't know with betting or alcohol, like the industries, what's going on, to be honest.
Yeah, fair enough. Yeah, very valid points. We should definitely look at different geographies in regard to airlines, because everybody's got a different agenda. America is clearly going to open up at a different time towards the UK. In the rest of Europe and Asia, that's a whole different matter. So I think maybe picking one from each geography could be a wise idea. Maybe say EasyJet, American Airlines, and Norwegian Airlines. We've covered UK, America, and the rest of Europe in that sense. It's just wise little thoughts like that, really thought-provoking comments like that really make a difference, which could really generate that profit that we need. Anybody got any comments regarding the knives before I kind of go off and implement and refine this strategy? Feel free to jump in.
Do you want to explain then a bit what our exact current situation on ex-ante is? So everyone can see.
I don't know how. Share screen, mate. Share screen.
Okay.
The reason I haven't been sharing profits with it is because I want to keep it very motivating. I want just the drive to be there regardless whether there's a profit or a loss. Because if I mention a big profit, we could get lazy. And we're here to win. We don't get lazy.
So with something like Tata done, should we just close down the whole position or most of it or part of it?
Alright, I'm going to jump into more of a PM mindset here, portfolio manager mindset. Tata Motors, Indian, bit of steel, bit of cars, pretty safe. It's been trading fairly healthily. I would say cash it in, 70k. We need that money put elsewhere. And it's been quite a good lockdown play. So I would close that position out.
Okay.
I agree with that actually, yeah.
You know, I've got some sticky notes here, so we'll close them out after this call, so we can just run through them quite nicely. Close, Tata, full. Right, let's focus on the winners here, Gonzalo. Right, PayPal. We're going to keep that. It's an online payment provider. It's a good play. Really good at facilitating online purchases. Took a bit of a tumble. Could be reaching a double down there. I'm not too concerned. I'd probably say half that position, just so we've got some capital.
I'd love to just add that PayPal have bid 500 million on a crypto startup company today.
Even better. And we have got below that Marathon Patent Group. They are a blockchain company. Bitcoin's back above 50k a day. I know, Ben, that makes you very happy. We're going to take advantage of that and cash that one right out and get out of that volatility. Because blockchain is a very volatile area, and Ethereum gas fees are going through the roof. And then we've got MP. Materials. Yeah, MP Materials. I'm pretty sure they're copper. In fact, I will double check that now. If they are copper, it's being kept. Yeah, that's being kept. It's rare earth. Happy to keep MP. MicroStrategy just below. That is purely Bitcoin. They've just issued some non-convertible bonds. Not very optimistic about that one. Micro can go in full. Fuel cell below that, I think. No. Yeah, FCX. Freeport. That's copper. That can stay. That's a great stock. I really enjoy that one. Moderna. Pretty straightforward. Although they have been a bit temperamental. You've seen a bit of volatility there. We've got Johnson & Johnson. So I'm happy to get rid of Moderna. And we've got Enphase. We got in them when they listed. Truth be told, I probably should have sold them a long time ago. But you best get out now rather than in the future at a lower price. And ESG, pretty sure they're solar panel focused. US operated, but they've got multiple geographies. That can go. If anyone's got any comments, just feel free to chuck them in. Below that is Deutsche Post, I'm pretty sure. Yeah, Deutsche Post. Yeah, they are now government owned, I believe. Government's got a stake in them. Trading pretty sideways. And you've seen we got in at 40.5. It's at 42.5 nearly. There's not much upside. I'd say get rid of that in full. And then we have got MasterCard. I'm fairly happy with MasterCard. Online payment service, well, card provider, as is Visa below. Solid fundamentals. We all know what MasterCard and Visa do. They've got pretty robust operations. Happy to keep that. Happy to keep Johnson & Johnson. And happy to keep Visa. All generating profits. And yeah, below that we have got JLW. Cornyn, yeah, big diversified glass provider. So you look at your phone and it's got glass on. Chances are they've manufactured it. If you've got an iPhone, they've definitely done it. And if you've got an Apple Watch, they've definitely done it as well. This was a vertical integration play because they produce glass for Johnson & Johnson and Moderna and Pfizer. And they've recently been downgraded, I think, by Goldman. And it's not too healthy, so I want to get out of that one in full. THCV, Tuscan Holdings, it's a SPAC. For the time frame, they're not going to actually acquire anybody, so it's quite a long process to acquire someone, and it's got a tiny profit on it. So that can go well. Right, now we're starting to get to the losers, which is not ideal. UPS, how to keep them solid provider of postal services across the Americas. Everyone knows what a UPS van delivers. Yeah, keep them. It's a tiny loss. I'm not too fussed. Been trading pretty laterally, so there's no massive downside, is there? But saying that, on the flip side, we need risk and we need capital to do that. So I think that's on the watch list to maybe cash that one in. Yeah, Palantir. Yeah, happy to watch this one. I hold these personally. Big believer in their services. Data analytics, kind of infrastructure, refinery, if you will, operations. They make very lean for companies. these have been a direct casualty of 10 years, of the 10-year yield. I think we should top this one up. I think it's a good play. It's half of its all-time high. So I'm happy to top that one up, unless anybody has a case against that. Nope. Anyone feel free? If not, perfect. Right, Brookfield Property REIT, Real Estate Investment Trust is a REIT. Brookfield operates across the US, and David Solomon, CEO of Goldman, has got a huge punch against working from home. I'd expect offices to go back pretty quickly. Housing is a pretty good spot for money in times of inflation because house prices rise. And we're not that much down. Very little capital was allocated. You can see I bought in at the top. I think with that one, it will be a case of tracking it. We have got Iberdrola, Spanish clean energy / renewable energy company. Not very volatile. Yeah, very, I would argue, illiquid as well. They're not going anywhere anytime soon, so that can be sold. Clean Spark, yeah, they provide charging points for EVs across America. We're down a few points, bought in very toppy. Started to test it again. I think half in it would be wise. Watch where it goes because it's going to move in like alongside these EVs, and they've also been the direct casualty of the 10 years. So Clean Spark, half. Apex, that can stay gone so because that's a mistake on Exani's part. They merged, and we took I think 3,000% profit on that company, which is great. Tesla, did not expect this one. Got greedy. Well, yeah, I got very greedy on this one. I think Ben alluded to it. Retail traders move in herds. Once you see that herd on Tesla, it's going to go only one way. And I would argue it's more than just a car company. Elon Musk is a very social guy. Anything he says gets took to heart. Tesla will not top it up, but we will hold it. Plug, yeah, same as Clean Spark. I think Clean Spark's actually hydrogen. Now that I think of it, Plug offer the charging points. Yeah, they've dropped a considerable amount. I'm happy to cash that in because I'm not going to watch it drop any further. Then we've got Li Autos. Yeah, this was a massive punt on the Chinese. Yeah, we could have took a lot of profit on that one, but we didn't. And what's the point in mulling over a loss when it's just clearly got a downward trend? The fundamentals are remaining the same. The technicals are just getting worse. So I would get rid of Li in full. Xpeng, yeah, really salty about this one. They took a huge price increase and we still didn't cash out because I got greedy. Lesson learned. I think we can halve that one. We can probably recover a bit more capital. NEO was just missed earnings, and I think that's bogged down estimations across the board. But I think NEO is fundamentally quite a good company. Xpeng can be halved, and NEO can remain because I want to try and cash out a better price on that one. So it's a very lean portfolio now that I go back through it. We are cashing in quite a lot of holdings, but this is going to be towards Aston Martin, EasyJet, American Airlines. We've got Lind, we've got a whole host of them that I've noted down. So strategy will be refined, allocations will be put in place. If anyone has any suggestions for companies, even a thought or an idea of a company, I'm more than happy to research it and make a choice. Just give me a name. But that's got to be done by tonight, by 12, because that's when these are going to be starting to get implemented to maximise the time horizon on them. Does that sound fair? Solid. Nice one. Thanks for your time tonight, guys. Really appreciate it. We're in the last legs of it now, and Gonzalo can echo that one. And it's all about taking action. We need to win this. Come on. So yeah, enjoy your evening. Like I said, if anyone wants to hang around and chat, feel free. I'm here for a while. So yeah, I'll catch you next week.
Thank you, guys.
Cheers, mate. Take care. Bye.